Good morning, it's Monday. I hope you had a terrific weekend. We looked at oil on Friday and we looked at this resistance around the 61.56 area, the 23.6% fib. Now, this was a bit tricky because we overran a bit further than I expected. We actually tested the previous peak up here on the 8th of October and then we pulled back. So the question is this support or resistance now? 61.60, 61.50 should be really important. And I'm a bit confused because we just pushed up above it and then closed bang on the level. But anyway, as I said to you on Friday, for me, the best sell level would be around the 64.70 area because we have the trend line going back to the 30th of July. We've got the 100 day moving average, the blue line, also lending weight to the resistance around the 64.70, 64.80 area. So we've got, moving average, Fibonacci level and the trend line. Price action, well, there was a bit of congestion up there as well, so I think that would be reliable. I would say that a break above 66.00 would need to take us out of short positions. That would indicate that we've overrun too far from the resistance level. But of course, the profit potential is pretty good. If you're risking 125 ticks maybe on the position, we could drop to 61.50, so there could be 300 ticks profit in the trade. That risk reward works for me. And crude is in a longer term bear trend, so we are at least trading in the direction of the trend. There's the crude weekly chart from the 6th of March, beginning of March 2022. So we've been in a bit of a decline. More recently, more sideways action, but certainly through the summer, since 22nd of June, we've seen declines in oil. So anyway, we'll see what happens with that resistance if we get up there today. Now, although the Forex markets aren't moving very much, and actually gold and silver have stalled, which is fair enough, it's been very volatile, they need to consolidate. The stock market's pushed higher on Friday. So we had a weaker than expected inflation number, and this period of consolidation, which goes back to around the 17th of September, so over a month, has now ended, it would appear. We've got to break higher into new territory, a new all-time high. So I would suggest that now the consolidation period has finished, we will start the new push higher. Now, I talked about this before. There's a lot of chatter on social media about stock markets being overextended, too expensive, stretched PE ratios. Sure, that's all true, but that doesn't mean that the market's going to go down. It probably means that there's a lot of shorts out there speculating and a lot of people who are not long that maybe need to be, and I think we could get a squeeze higher. So on the weekly chart, you can see we've had a really good run up from the 6th of April. We stalled here at 67.65 in the S&P, and we had that big downdraft. Then we moved sideways on the weekly chart. I'm looking, but that bearish engulfing candle did not lead to a significant decline in the index. It only led to a sideways consolidation, and that is quite common. You see, these bearish engulfing candles are important signals, but they don't always mean that the trend has changed. It might just mean that the bull trend has exhausted and we need to move sideways for a while. Some people think that markets either go up or down. Well, unfortunately, that's not always true. They spend a lot of time going sideways, probably more than 50% of the time going sideways. Even when markets are trending, they spend significant periods of time in consolidation. Okay, back to the 4-hour chart. I've left these Fibonacci levels on because it shows you where the support is from the previous all-time high, 67.65. So if we retrace down to, let's say, 67.65, 67.50, that 15-point range should be support level. We should see buyers coming back in there. So it could be worth a long position. Where would I put my stop loss? Maybe below 67.25. That gives us enough room. And then we're just talking about the lower end of this congestion area here. If we started breaking there, I wouldn't want to be in a long position. So that might be something that we can look at if the market does retrace to retest that area. It may not retest. It might just continue to push higher now. We might see a bit of a short squeeze. Watch for a gap higher on Monday morning. If we have a gap open above the all-time high, which is at 68.02, that would indicate that it's a breakaway gap, and that's particularly bullish. It means there's almost panic buying. 68.80, 68.75, 68.80 would be the first target if we continue higher. Nasdaq breaking higher, of course, as well. So again, I think this is probably the beginning of the next leg higher in the bull trend, where do we want to be looking at trying long positions. If we do have a little pullback at the beginning of the week, that trend line's not right. Just need a horizontal trend line, actually. There we go, horizontal, that'll do for me. There we go. Okay, so we've got 25,200 is 25,210 down to, let's say, 25,150, maybe even 25,100. Buying it in that 100 point range, 25,200 down to 25,100 would make sense to me. Stop below 25,000, so pretty tight stop, very low risk. And if we do keep going, which I think we will, we're looking at 25,600, 25,700, 25,800 and 25,900. Pretty easy numbers to remember. So there you go. That's the idea for the stock markets. I think we will continue to push higher. Good luck if you are trading oil or the stock markets today, and join me tomorrow on Tuesday morning.